Ladies and gentlemen of the crypto space, we're live at 11:20 a.m. on a Wednesday, February 3rd. We have to start early today. We have content, a lot of content that we need to go through. I've been delving more so into macro financial economics than any time I've done in the past. I'm seeing some relationships, some correlation, some inverse correlation that are overwhelmingly worthwhile to note, discuss, and talk about, particularly with regard to a story change. That is a common topic, a common theme that I often mention. When a story changes is when we take action. Unless a story changes, it's going to proceed as planned. It's going to proceed as foreseen or speculated. And we can only take action when a story changes. Whether the story change is favorable or unfavorable doesn't mean a damn thing. There's always going to be assets that are outperforming, always going to be assets that are underperforming, and our goal is to allocate value towards the assets that are outperforming. Quite interesting that when you see extreme depreciated price action when the price is coming down, the same applies. There's nothing wrong with the price coming down. What's pertinent is if the story has changed for an asset, the price going down doesn't indicate the fundamentals of a project have changed. So let's say two assets are going down. The one that's going down less is outperforming the one that's going down more. So these are extremely useful considerations when contemplating how to manage portfolio allocations and more broadly, portfolio balance. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. Got Squanchies in the house. What's up, fam? White Wolf, good morning. Bitters in the house. Yes, always a pleasure. When F 2.0 drops, will there still be the same arbitrage opportunities? Yes, F 2.0, L2 solutions, as well as the status quo of F 1.0. There is MEV, minor extractable value, at all levels, and I am very inclined to think this is the case across the entire smart contract L1 scene, which includes Polkadot, Cosmos. The point is, this project just started in November and has in development a good part of 2020. This is barely the beginning. Projects take time to play out. When you're talking about the scale and scope of, dare we say, macroeconomics, or even just the scale and scope of the crypto space, um, it's kind of like astronomical events. How a supernova explosion takes like, well, that's a bad example, but because that happens relatively quickly on the cosmic scale. But there's celestial events that take millions and millions of years to occur. And that is much the same analogous way things play out with macroeconomics. It's like an oil tanker trying to make a left-hand turn. It may take 5 hours. I don't know, but that's just the point I'm trying to make. These story changes and the evolution of these projects have time horizons that are beyond the capacity of the average retail investor to process. These things don't occur in minutes. These things don't occur in days. These things could take weeks and months and maybe even years to play out. And clearly, that's the story of Bitcoin. The story of Bitcoin has taken 10 plus years to play out. And the story has changed many times, and where we are, the story has changed late last year, this year, and it is obvious. It is so obvious when a story changes. Obviously I speak for myself, which is why I do this stream, and I'm more than happy and proud to be able to share this information and insight with everyone, as many people as possible. But this is quite like what I saw September 1st, 2020. The story changed. We saw the different price action that was occurring. We saw the different assets that were experiencing appreciation and depreciation. And when the story changed, we needed to take a defensive course of action. And for those that optimally reallocated to the macro crypto assets in September 2020, were able to preserve a significant amount of value. We'll get to that point, and with regard to this current cycle, and what is emerging and evolving in my mind is the end game, how this cycle plays out. I know many things about where we are, and I'm starting to see a picture of where we are compared to where we're going to be, and how events will likely unfold. Retail's not in yet. There's no retail in this space right now. There's no irrational exuberance. Clearly, there is. I mean, you got Doge and XRP pulling whatever the stunts they did. But when retail hits, based on just simply 2017, 2018 experience, when retail hits, you're going to see a multiple go on in the crypto space. The broad crypto space will just multiply, 5, 6, 7, 8, 9, 10x across the entire space. And we will inevitably have an experience of irrational exuberance where retail just creates a blow off top. And we know that retail is not able to process depreciation. This comes back to human fundamental nature of fear, uncertainty, and doubt. And when you have a blow off top, which is basically what's occurring in the broad tech equities and the broad equities market, any significant amount of depreciation proceeds to cause a ripple effect, a chain reaction, where the average retail person, being emotionally susceptible, not prepared for depreciated price action, it just cascades. It's a cascading effect, and it's just an all-out implosion. We've experienced this broadly in the crypto space over the years. We've seen this time and time again in the equity space. It's the bubble cycles, and they're quite fascinating when you dive into the not just the technicals, the fact that shit is going up and down, but more so the psychology at play that triggers these particular events, whether it's in the equity space or the crypto space. And the psychology, what's so fascinating about it's simple. It's you, and these feelings, these emotions, you experience fear. Is it going to happen? Is it going to go up? Am I going to lose money? And what we talk about on this stream is that most of those feelings are absolutely irrelevant. They don't mean much with regard to optimal portfolio management, balance, position sizing. What matters is the story and the narrative that's playing out. So, in many regards, we have to be good storytellers, and that's what I do. I consider this story time with story time with Noah. Should change the damn title of the stream to that, because this is basically the story, the narrative that I see playing out. And when the story changes, that is the only time to make your changes. Take action. Charlie G's in the house. Always a pleasure. Smack them thumbs up buttons. 24 persons in the stream. 5 likes. We can do better than that. Yeah. Shoes in the house. Always a pleasure. Squanchy hooking it up. Much appreciated. Much appreciated. I love the support and engagement. I hope I help. That's all that matters to me. What do you think about Bitcoin Phase 5 theory of Plan B? So Plan B is one of the more significant participants in the space. His capacity to see the big picture has started a chain reaction. He has a clear vision. His technical and fundamental analysis is spot on, only rivaled by the likes of probably Willy Woo, but no doubt their analysis and the data they provide are complementary in all regards. He's spot on. It's just, he's absolutely spot on. And it's going to take time for that to play out. And that is what people are playing. You're playing a game against yourself. The market going up, the market going, it's irrelevant, because what's happening is at the large scale, at the humanity scale, are these sequences of events. And we know how people respond to fear, uncertainty, and doubt. And these sequences of events are somewhat predictable. And clearly, from a supply and demand perspective, we understand how market participants react when you have a supply disruption. We're seeing it across the board. We're seeing the inflation in shipping, the inflation, shipping costs, the inflation in a variety of sectors, particularly asset prices, because the demand is exceeding the supply. This is one of the most understood, or at least understandable, phenomena that we really need to appreciate, because that's the difference between short-term insight and long-term vision. Supply and demand balance is literally everything. It's everything we deal with. If there's a restriction in supply, it's a depreciated pressure faced with equivalent, if not increasing demand. It's inevitable that the price is going to reflect the decrease in supply. Now, and we'll get into it with Rook, and that's exactly what's occurring, and it's why I argue is probably the best fundamental and technical setup I've ever seen for an asset. Derek, doubt it's for weekly. It's not. It's this isn't easy. It's intimidating. It's frustrating at times when the picture is not clear, but it's exciting at times when the picture starts to become clear. When you see the path of events start to emerge and you start to see a confluence suggesting support of the sequence you see unfolding. And you with the data tells the whole story. It's all about the data, ladies and gentlemen. That's the bottom line. Crypto girls, crypty girls in the house. Always a pleasure. Always a pleasure. Appreciate taking time to respond to my questions on Twitter. Listen, I do the best I can. I got a lot of folks that direct message me nowadays. I definitely have no capacity to respond to everyone, but I will always do my best. And it's probably the easiest to just hit me up on the YouTube stream. Because everyone's interested in, if you're asking a question, I guarantee you other people are interested. So this is a perfect place for such questions. Max in the house, yeah. RR to me. Always a pleasure. Squanchy, you help big time. I appreciate it. Cryptic Girl, rock on. All right, let's dig in. Let's talk macro for a little bit because, Raul is by far one of the most invaluable participants of the crypto space and broadly the entire financial system. His understanding of these macroeconomic relationships are historically legendary, and his presentation on Sunday was extraordinarily insightful. Did not induce fear as he was fearful it would do, but it requires a response. And when this person like me is presented with a personality providing their opinion as such, I responded and I did some due diligence. I look at the data. I look up and I Google. This shit is all available on Google. I Google technical terminology, technical phenomena. I understand the history of how these things work to some degree. Bear in mind, I don't understand them to any extent as compared to a person like Lynn Alden and Stephen Van Meter. But the whole point is we all have to digest these ideas and process them into our own stories. So anyway, whatever. I ramble. Monologues. All right. So the dollar has historically been thought of as a wrecking ball. We've seen price appreciation of the dollar, and we see equities markets completely tank. And we've seen the crypto market completely tank. I follow the crypto market more so than the equities markets. Broadly follow the equities markets because I do have those long-standing battery metal positions, so on and so forth. But in the crypto space, what's interesting is we've seen correlation as well as inverse correlation. And that leads me to have doubts that there's a guarantee to have direct correlation. If the dollar rips up, there's no guarantee it's going to be depreciative across the broad crypto space. And that leads me to question why? Why is that the case? And what are the relationships between fiat is predominantly the dollar? You're not really going to be looking at other fiats versus the crypto space. The dollar is the wrecking ball, or at least the one that carries the most potential influence. But when we started to see that the dollar going up had, especially yesterday with the ridiculous equities market rally, we saw a muted, if not entirely neutered, effect on the equities market rally. Literally, the dollar broke out, significantly pushing up against resistance. Currently, is having a bit of a pull down. Whether it fully breaks out of this resistance is another story. Bear in mind, if it breaks out of this resistance, we got a 100 SMA, a 200 EMA, and a 200 SMA, notably above. But historically, we've seen some rips in here that were extremely depreciative across the broad equity space. So, based on that history, if we saw a rip from here to 92, dare we hit the 200 EMA at 93, close to 94 with the 200 SMA, historically, what we've seen is we would experience complete carnage and destruction across all spaces. But what did we experience yesterday? We experienced dollar bullishness breaking out, and that would, logically induce an emotional response in the broad spectrum of market participants. They're humans; they respond accordingly. But what we've noticed is that the story changed. So I've been also looking at treasuries, treasury yields, because this is basically risk off. When treasury yields collapse, people are just dumping their money into bonds, and this is where Stephen Van Meter has loved his story, and this plays in many regards into Brent Johnson's theories. Um, we're not seeing a treasury yield collapse. We're not seeing bonds skyrocket in price. We did for a while, but clearly this is a significant increase in yield action. I've been looking at this for a while. I got a bunch of lines up, and I'm seeing this thing just keep going up. Look at that, hitting resistance, which is the previous high. This thing breaks through, which gut says is based on technicals. This is likely to occur. We're talking about a significant rip to the upside. What I have here is a price range up until the 200 EMA on the weekly. We're talking about a significant increase in yield for the 30-year bond, 30-year Treasury bond. And what's notable here is this. Short-term bonds are basically flat. They're sitting on support. This is There's only one uh, way to see this. This is called the steepening of the yield curve, and the steepening of the yield curve is extraordinary, and it tells the story, and it means the story is changing. Um, and the steepening of the yield curve is indicative of market participants expecting an increase in inflation and economic growth. Now, whether they're absolutely ludicrous is probably, consistent with the narrative of Stephen and Brent. And what's most interesting that I observed is you could have the steepening of the yield curve, 30-year bonds go up in yield, and the dollar could completely break out. So what you could have is inflation. You could have an increase in economic activity, and you could actually have Brent Johnson's theory play out, where the dollar just goes to the moon. And now, to what degree long dated treasuries go up in yield, and the dollar's bullishness, how that in the long term plays into the function of the broad equities market and the crypto space is unknown. We're not there yet. We don't necessarily see the correlation or the inverse correlation. But what we saw yesterday was the dollar bullishness didn't have the effect it has had in the past. We saw that the long dated bonds and the yield they offer had more of an effect. So as the long dated bonds go up, we're seeing a correlation with the broad equities market as well as the stability, if not the appreciation experienced in the crypto space. So this is some really cool stuff. And I don't understand all of it, but what I see is correlation and inverse correlation. And these things play into a story that I'm able to tell. And it's definitely meaningful with regard to my portfolio management and my capacity to help folks that listen to me and how they manage their fear, uncertainty, and doubt. Let me just check comments. What am I missing? John, Noah for president. MEV is insanely valuable. Yeah, I'll get into Rook. I started early and I may go late. There's so much content to cover today, sir. Grayscale Bitcoin Trust is opening a new trust. Will be .ave cans. Oh my God. Yeah, Lewis, it's just I'm not even going to get into it, but holy crap! Wow. Crypto chick, hey, Cal, all the best from Norway. I'm always jelly of those views and pictures you take. Lewis, macro legacy narrative is unsustainable. Things are changing. I don't know. Unsustainable is a meaningful word, but I always tell everyone that I don't care. I don't have price targets. I don't care what folks really think about a target. What I care about is up or down, and I care about story changes, whether things are going to start going up that were once going down, or things that are going going down when they once were going up. And these story changes allow me to optimally structure the portfolio to best position myself for either incoming or imminent price appreciation or depreciation. Now, I don't care if an asset's going down. What I care about is the balance of the portfolio when uh, an asset is going down more than another asset. Then you want to allocate more to the assets that's going down least. As I've said, that is going to be the asset that's relatively outperforming. Um, when the reversion mean reversion. So yeah, this is like the equities market. I know I went off on my story and now I'm dabbling with the comments, but it's meaningful. So back at the equities market for a moment, yeah, that thing's going to explode broadly. It's going to explode. It's in a blow off top. The irrational exuberance is through the roof. The market participants are completely irrational. Now it could go higher. Whoopie do. It's just a market of complete unsustainability, and it doesn't matter if it goes higher. What will happen because of the market participants being retail, having no capacity whatsoever to stomach a depreciative event or a depreciative cascade, um, that's what will happen. And that we've seen it in the crypto space. When you go from 20 grand to 3 grand, it's because the market participants have no capacity to process the full macro story of the market that they're dealing with. And the cascade happens. The selling causes more selling, causes more selling, causes more selling until there's a bottom, a capitulation, the market stabilizes. But what's going to happen in the equities market? It's going to be extraordinary trauma. And this plays right into the commodity super cycle. Retail is going to be completely destroyed in the broader equities markets. They're going to be completely emotionally traumatized. They're going to apply no value. They may even pull from their 401ks. Who knows? But what I know is when the equities markets broadly, not just retrace, collapse, this plays into my story that I've been telling about the great value reallocation. Broadly, commodities, mining and metals are at 90-year historic lows as compared to the old. Not, I can't even say overly inflated equities markets. This is just like disgusting. It's perverted at this point. It's a word that I can't. It's an adjective that I can't even think of. That's how far gone it is. It's like when you go insane and you're lost and there's no saving you. That's kind of where the market is. It's just extraordinary to observe. So when this thing collapses, and I see it as an inevitability, we're going to have a trillions of dollars reallocated to the asset that's outperforming. And the asset that's outperforming is going to be the one that's depreciating less. Now, don't get me wrong, when the broader equities market collapses, what's going to happen is the fear and the emotion spread to basically all corners. We're going to have depreciated price action, probably across the commodities, mining, and metal space, and probably across the crypto space to some degree. But what's most important when you experience that crash experience, when you see it happening, don't look for the depreciation of value. Don't look for the loss of value and say, oh my God, I'm losing so much value. Clearly, if you're exposed to the tech equity space, yeah, that's probably a problem. But as I talk about in the stream, you shouldn't be exposed to these tech equities. That's just crazy risk, especially considering the appreciation, the asymmetric appreciation potential of the broader crypto space. The hell are you doing exposed to the broader tech equity space? That's ridiculous. It's so irrational. So we might see a hit across the commodities, mining, and metal space as well as the crypto space. But what's going to happen is they're going to go down less. And the emotional response that the broader market participants, especially the big boys, are going to experience is that they're stronger. And when the value starts to reallocate from the liquidated, overinflated equities, they're not going to reallocate to the equities. They're not going to reallocate the companies that are operating at 1,000 plus P&E that have had the vast majority of their revenue streams destroyed and are a good portion operating as zombie companies. No, they're going to allocate to the stronger assets, the assets that held up strongest during the broader equities market carnage that's inevitably coming at this point. They're going to allocate to commodities, mining, metals, and the crypto space. And the wild card really is the crypto space because there's no historic precedent. We've had commodity super cycles historically. It's inevitable, safe to say it's inevitable that that's going to occur again. The commodities are going to inflate. Um, Value stocks are going to become the new growth stocks and are going to be more stable, relatively speaking. And the story of the broader stock markets will change from that of less of a corporate and company play to more of like the fundamentals. We need materials, we need supplies to actually make stuff. And right now, that totally is consistent with what we know about manufacturing and mining in the continent of the United States. We make no lithium, no cobalt, no nickel, no graphite. Everything is imported from China, and it's beyond my knowledge. I obviously I invest in the battery metals plays because I know of that, and that's my allocation. But it's definitely so much broader than that. We are so deficient in domestic mining capacity, and we don't have the materials to do what we want to do as a self-sufficient nation. So, wow, that was a deep dive into what's going on with the rest of the world. With the macroeconomics, the equities markets, and fiat, and it's some serious stuff. But it's so important, and why I wanted to start the stream early is because all of that is totally necessary to understand what the heck is going on with the crypto space, what it means in the big picture, the story that could be told about the crypto space, its significance, where it's heading, why it's heading there, how the potential end game that's kind of starting to begin to form a picture in my mind. We can't talk about the crypto space without understanding the big picture. Costco, nice intermarket analysis. I try my best. Stelios, I haven't talked about Rook yet. I need the big picture first, my friend. I'll get to it right now. Get a Noah's Ark or get destroyed. Thank you, my brother. I appreciate it. My goal is proper portfolio management, proper position sizing, proper risk consideration, and got to get you guys to outperform and protect your gains. E-goal is a big deal. Resistance flip support is the technical indicator you want to look for. You want to look for the higher high if the resistance flips support and support is retested, and that's where need to start looking at the technicals. And what you really want to look for to have extreme confluence suggesting bullish continuation is that on the long-term EMAs, on the long time frames. Look on the daily, look on the weekly, find the 200 EMA, and look for it to be broken to the upside, retested, flip support, and the higher high. And then you are pretty much in a really, really good position to expect that asset to continue to appreciate. That's the name of the game. Cryptian script in the house, John, my man. Let me see what I'm missing. F is killing. Oh my God, look at the gas prices. Nice observation. That just means the market volume, the market activity is in a frenzy, and that's incredible. That's consumption, that's adoption, that's use. And you know what's most important? Back to macroeconomics for 2 seconds. That's called monetary velocity. With Aave at $4 billion, and the other lending and borrowing protocols, as well as the AMMs in the space, the amount of monetary velocity in the crypto space is vertical. This is an explosive situation. And much of the concern in the legacy financial markets is because there's sheer collapse of monetary velocity, particularly M2 velocity, particularly the M2 base, the quantity of money at M2 level is just exploding, especially with whatever the hell they're going to print out of the upcoming legislation. So M2 is exploding, which is the denominator in the velocity calculation. So M2 velocity is absolutely collapsing. Now, clearly, it's not directly analogous to what I'm talking about with regard to velocity in the crypto space. But what I give a shit about is the fact that there's billions and billions of dollars being borrowed, being lent, being leveraged. There's options, synthetics, derivatives, and all of these are truly, truly fundamental components of a functioning financial system that mirrors the legacy financial system in all regards, with the caveat that they're extraordinarily better. extraordinarily better. You've eliminated entire accounting companies. You've reduced. I don't want to get into that. It completely deprecates countless aspects of the legacy financial system. And the best part, 2020 and what has occurred thus far in 2021 has provided empirical data that that conclusion is the case. Might experience intermittent volatility, a pause in the progression of the market's evolution. But what we saw in 2020 and 21 is empirical evidence that we're on the verge of a full systemic disruption of the legacy financial system. There's literally no doubt in my mind at this point about that. Velocity's through the roof. All right, so let's look at Bitcoin real quick. Yeah, guys. So Sailors Conference is on this week. And this technical setup is absolutely insane. So broke through previous high down here. Now clearly this is on the daily, so this is big picture. We're above the long-term moving averages on every single time frame. What probably stands out most to me is the lack of downward movement and upward movement for great periods of time. What that means is there's basically no selling. So the market rips to the upside, and there's basically no selling. So what you're having, what's going on is the sellers are drying up, the liquidity is drying up, um, and new cost basis is being achieved. The liquid assets, the ones that people want to liquidate and get rid of, are being bought to such a degree that the buyers exceed the sellers, which is triggering the price appreciation, creating the new cost basis here. What's happening here is overwhelmingly called consolidation. Creating a new cost basis. And this is where the old market participants, the weak hands, are being shaken out. New participants are entering at the higher price point, and it only goes up from here. This is basically a flooring pattern, is creating a new base for the next leg up to bounce or trigger off of. This chart is absolutely incredible. Not much more I could say about that. We may experience a retest. I don't see in the Bitcoin space, considering the macroeconomics we talked about, I don't see a risk off event. I don't see a retail frenzy. I don't see a cascade threat where the vast majority of participants are retail and emotionally susceptible to depreciated price action. What I see when it rips to the upside and there's barely any action to the downside, I see illiquidity. I see demand exceeding supply. I see a shift from weak hands to strong hands. I see the full cost basis reset occurring, and this is one of the strongest charts. Uh, it's an absolutely incredible chart to look at, and we're going to look at probably something um, more incredible. We'll look at Rook, and let's take a look at Rook. I might actually end on time. I'm happy I started early. So, yeah. So what's notable about this chart versus Bitcoin? Bitcoin's 11 years old. This is an ascent. It's brand new. It's emergent. It just started in November. Um, so we had this irrationality at the beginning, completely irrelevant. We had, some speculation, some trying for the market to try and find its place here. But then we start to see comprehension, and we start to see understanding of what it really is. But it's very speculative at this point. You know how I know that? Look at the irrationality. Look at the wicks to the upside. You got a random couple of people coming in with a $500,000, $1 million, and it's ripping to the upside. A healthy market has an equal amount of buyers and sellers. Anytime you see a significant rip to the upside, it's completely unsustainable, and it will be met by liquidation at the top. Particularly because it's a selling opportunity, knowing that it's going to come back down. It's guaranteed. If you see something go straight up, it's going to come straight down. That's just the way human beings work. So what's fascinating here is extraordinary. We see irrationality in that it was more speculation. That this was over about a month ago. We didn't know what was going to happen. We didn't have any guidance with regard to the February. Turned out to be the February 2nd supply disruption event, and basically the second part of the rollout of the protocol. So that was all speculative. And that's why we see this volatility to the upside. Whether it's volatility to the upside or the downside, it's irrational nonetheless. But what we started to see here is what is absolutely mind blowing. These one resistance flip support, previous resistance flip support for 20 plus days with retests almost every day. And these wicks to the downside are not just a retest, these wicks to the downside are a complete cycling of liquid assets from weaker hands to stronger hands. And it means that everything that was sold was bought, maintaining the price action above previous resistance flip support. And for this to occur for such an early asset, such a new asset, day after day after day, is incredible. And to top it all off, resistance flip support turned into an ascending triangle, which is when you talk about technicals, it's just a flat out bullish trend formation. It's not even questionably bearish. It's not even debatable. It's historically just probably one of the most bullish trend formations there is. And we hit resistance. And even more so, the damn resistance of the ascending triangle is the previous top, is the previous high when after first launch. That's crazy. That's just incredible. So 1, 2, 3, 4, 5 complete intersections with the resistance of the ascending triangle rips through the upside. And clearly when you have this is hundreds of dollars, this little region right here. So clearly you're going to have some asset cycling, profit taking, which pull it down. There's a relatively large amount of inflation that was occurring for the first 3 months. But what happens is this process is the same thing I just discussed about for Bitcoin. This is a cost basis reset. The weak hands are converted into strong hands. The old market participants are converted to new market participants, creating a flooring action. So you have this cost basis reset occurring on top of a resistance flip support. All the assets being sold, being bought by new market participants, producing an ascending triangle formation with five strikes of resistance. And dare we talk about the fundamentals of the project and what MEV is, miner extractable value, and the potential billions upon billions of dollars that could be extracted from the network that are not malicious, not toxic, not bad. They will only benefit the persons that consume this platform, particularly at the DEX level, and that is extraordinary. This project successfully reallocates historically minor directed transaction revenue, DEX transaction revenue, back to the user. Let's say this is going to reduce gas prices. This is going to decrease slippage, basically increase the efficiency of the entire AMM space. So if it's not just like all over their radar at the moment, once one AMM integrates it, and you see a little bit of social media commentary that gas prices, 294 gwei are $15, $20 or $100 as compared to what, like you go to 1 inch and this will be a $200 transaction right now. That is going to absolutely ripple, be viral to a level that I can't talk about for any other asset. I mean, every asset has their story. Every asset, there's countless assets that we know about, that we've discussed, that have extraordinary potential. But the amount of value, the fact is, when the value, the MEV, is extracted from the Ethereum network, whether it's RMBTC, DAI, USDC, or whatever, or Ethereum, that goes into the treasury. And then Rook emissions are given in return, which means this is a Rook standard. The Rook has value backing it, real relative dollar value, Bitcoin or Ethereum, but DAI and USDC are actual dollar value. So there's these Rook literally actually have dollar value backing them up. It takes brains, time, effort, and money for the keepers to make a profit. they put in $10,000 worth of value and are able to extract $15,000, who the hell's not? That's incredible. So it takes time, effort, and money. So that means there's value in this space, value required to generate value. And all of this gives Rook fundamental, meaningful value. And you put all of these puzzle pieces together, and what the general public, with the retail space, and what Twitter experience, it's subconscious, and they see it manifest in social media posts. They see it manifest in data interpretations, much like I'm providing an interpretation of the story I'm telling you, and that triggers a reaction across the broad market participants, to be excited and see opportunity and see value. And that just explodes the price. To top it all off, how can I top it all off on this point? 30% supply disruption. I can't even talk about it anymore. Just every single fundamental and technical piece of data just points to extraordinary potential. Now, clearly, as I always talk about, we follow the story, we follow the data. If the story changes, it changes. We respond accordingly. We reduce position sizing, we take risk off, we reallocate to macro assets that are going to appreciate in the face of a depreciating altcoin asset, and we proceed accordingly. But the point is, we only respond and make changes when the story changes. Unless the story changes, that is the current story that I just elaborated in some of the greatest detail that I probably could possibly provide. One of the best stories in the entire crypto space. All right, let me go through the comments, and we're going to wrap this up before I got a headache. Surprised I'm able to actually tell the story I just told. I missed a lot. I'm going to try my best. Lewis, did you buy apparel from Crypty Girl? No doubt. Get your gear from the Crypty Girl. Stable crypto myself. Complicated topic. He told us at 80, then 140, then 200, then 300, then 390. And what the heck is it at now? I think Rook is at 5 and change. 532. Woo! Look at that price, baby. My vast majority of my positions at $65. Almost at a 10x already, and this thing's gonna. $1 billion is a unicorn, and this thing's at 150 mil market cap. This thing could rip 8x, and people will be like, "Oh, all right, it's at a price that it's supposed to be." With Uniswap trading at 5 bill and Aave or whatever it's at right now, it's absolutely rip roaring. $345 a token. Absolutely incredible what Aave is going to become. The long term, the time horizon for Aave, it could become one of the most valuable entities, assets, if they incorporate whatever projects, organizations on the planet. They're totally in a position to disrupt the crap out of legacy finance. And frankly, so is BlockFi, Celsius, and Cresco FinCEN for that matter. I told my friend in Bitcoin to go into Bitcoin months ago. I've seen Bitcoin before, and they've actually believed me this time. Oh, before it was like to get out of here. So if they got in, you did the right thing. I don't even want to start that topic of why Bitcoin is just going to explode in value. That's a whole conversation unto itself. And frankly, Michael Saylor is going to do justice if we see any videos come out of his conference this week. He does ridiculous justice for analogies to physical phenomena, and his perspective is one, refreshing, two, impressive. Do you think F futures launch on February 8th could potentially drag price of F downward? No. I think Ethereum, the demand for it is extraordinary, and we know that by gas prices. When you see gas prices up, you know Ethereum demand is going to be through the roof, and we're going to see price appreciation because you need Ethereum to interact with the DeFi space, and you need to interact with the DeFi space to make extraordinary amounts of money. So, yeah, Ethereum is the fuel for the DeFi space. Bing, bada, boom. Borrow from the keeper DAO mempool, turn a profit, share a portion of the profit of the pool, and then up goes Rook. Yeah, what more can be said? What are your thoughts on SDT? Never heard of it. Oh wait, SDT is that is that at stake now? Is that SDT? Yeah, okay. Okay, it's on my radar. I got a little position. Nothing big. I think it was a couple $100 worth. So, cool. 350. It was 1,000% APY when I popped some value in, so I got 10 extra. Listen, um, Alpha. Alpha went like 5,000%. If an asset goes 5,000% in price, sure, you could put an exorbitant risk on amount of money in. That's just not my thing. For me, Rook seems to be that play for me. But if you put like $300 into an asset that goes 5,000% and you turn $300 into $15,000, God damn it, you did something right. So stop trying to gamble and stop trying to turn $1,000 into $10 million. Stop taking 100% of your portfolio and throwing it into one asset, never looking at technical data or truly understanding how the fundamentals of a project play into the big picture of the macro fundamentals of the planet. All you need is small bets. All you need is small bets because Bitcoin is going to asymmetrically appreciate. Whole point is stop gambling. So I look, a person like me, you guys get a little bit of a sense of what I'm playing with. I got like $500 in here. 300 actually SDT is it's three like $350. Lovely. That's the deal. What are your thoughts on perp? I don't know too much. I can't speak to it at this point. Uh, I don't max. I don't think in terms of price. I think in terms of up and down. With regard to you saying one Rook equals one Ethereum. I think in terms of up or down. White Wolf, Bitcoin, Rook, or Aave. I have all but curious. Man, those three assets. There's a bunch more. I mean, Ren. Yeah, and I could just. We've talked about assets that I think are just going to change everything. And then, we've applied value to those. We've done the right thing, guys. Let's hit the like button and grow Noah's channel. Thank you, everyone. I appreciate it. Jack, is there any downside to providing ETH to Rook Pool? The only thing is risk with regard to the security of the pool. And Ren is currently managing how many hundreds of millions, if not a couple billion and billions of dollars worth of transactions. Their technological capacity and intellectual capacity to build a functional secure protocol has been empirically proven over the last year to be extraordinary. The Ren team the Ren team broadly is an extraordinary team. There's a lot of extraordinary teams in the crypto space, but these people, and not speaking about Ren, but these people that are building these protocols like Curve and 1inch and Ren, these are the smartest minds on the planet. This is not trivial. Programming at the Solidity level, the edge cases, and the diligence required to handle the Turing complete nature of the language or the platform. Um, these are some of the smartest people, and like Banteg and Andre with Yearn. I firmly believe that these persons and these teams are are empirically proven at this point to be building fully functional financial system components. Um, and this could be some crazy shit when the sovereigns start to get into the mix. When the U.S. launches its digital dollar, which is inevitable, and the Chinese yuan, which is so far ahead of the U.S. dollar, they are so far ahead. China is so far ahead of the U.S. and cryptocurrency with regard to cryptocurrency initiatives. It's fascinating with the BSN, and that fits into Cosmos and IrisNet and a lot of different narratives we talked about, and Kava and Band and literally like Cosmos I see is the east and more so Polkadot on the west, and Ethereum is the disruption. And you don't disrupt ongoing disruptions. It's not possible. They're years in development. Incredible, incredible. So you're going to have Polkadot, you're going to have Cosmos as completely ancillary, synergistic platforms. And this thing is going to emerge into some of the most incredible technology over the next couple of years that entirely disrupts the legacy financial system because it's so goddamn pathetic what banks are. They're so legacy, they're so old, they're so useless, and they're meaningless, and they've been deprecated. Even Gemini is offering 3% on Bitcoin. Sorry, I get a little angry at this point. Come on, it's crazy. It's crazy. So that's the only downside is risk, but you're dealing with some of the smartest minds on the planet and protocols that have proven themselves. So you don't apply the entirety of your position. You never go risk on entirely to an asset. You remain rational and you apply small parts of your total portfolio to any risk on position. So let's say you have a Bitcoin, you throw in a quarter Bitcoin into Rook for liquidity. And that's a prudent bet. You've risked a portion of your portfolio with the majority not being in a risk on position. And that's the way you need to think about portfolio balance. How much risk do you want to take? Are you able to accept a loss if it occurs? Is the risk worth the reward? That's the name of the game. Zader, if your wife questions your time away from the family, let her know that your impact is real. My family benefits meaningful from your influence on me in a world of BitBoys. Be in Noah. Thank you, sir. You're very welcome. I really appreciate that. I really hope this helps everyone. This was a long stream. We delved into macroeconomics, and I see just stability in the market. I see continued asset price inflation. And frankly, the global market is saying that as well, with the steepening yield curve, the 30-year treasuries and interest rates going up, and the dollar having a muted effect, especially considering the broad equities markets rally yesterday. The dollar has been neutered in many regards. Now, I don't know how that's overwhelmingly going to play out over the longer term, but that's what we saw yesterday. And we'll see. The data tells the story in the end, and we look for story changes and to adjust our portfolio accordingly. 12:10 p.m. on a Wednesday, February 3rd. Thank you, everyone, for joining. 44 on the stream, 32 likes, 13 more thumbs up. Please tell everyone to subscribe. I hope I help. I wish you all a wonderful day, and I will see you tomorrow. Peace.